Hello, and thank you for joining us on another session of Block Chat. On the brief, we only discuss what matters. Today, it's Denis Petrovcic, which you can't see yet, and Makram Hani. You'll see him in a second. We decided to make an intro without blips today, so we decided to go on without any. Now, we're late around 5 minutes. Okay, we're so sorry. We're regularly punctual, but we insisted on having a technical difficulty today in the beginning of our stream, and now we're on with it. Dennis, how are you?
I'm great. I'm much better now. Like 10 minutes ago, I was very very stressed. We're using Microsoft Teams to do this stream, and it was for some reason not running on my Mac. It was just not starting. I had to update it. So sorry, everybody. My fault.
We're on, and today we had a week of so much happening. Actually, it's 2 weeks of so much happening because the session that you've seen last week, guys, with Papa Blockchain, Pekka Kelka, was a recorded session. As you know, we're doing sessions with guests that are recorded. This week, it's a live session. We've had 2 weeks that had run, and within those 2 weeks, too much have happened. Dennis, what have happened within the past 2 weeks? And was it any exciting or was it boring?
Definitely not boring. I think we're running at a very fast pace. There's a lot of things that need to be done on a daily basis. So I think we're in a good position. I like where we are and where we're heading. I can see that we're overcoming certain obstacles. We're learning how to pitch to real estate owners, which is then obviously showing as well on the assets that we're kind of able to get in our tokenization oven, as we call it. And besides, we're as well expanding our team, and it's an announcement I'm really glad to be making today.
What announcement?
How about you?
Let's
How are you, Makram, experiencing this 2 weeks? What's your,
I'm becoming
what's your take on
busier,
it?
and I can't become any busier because now I'm using like 21 hours of the day. Probably soon I'll be out of space. Announcements, yes, exciting announcement. Actually, we should have plenty of announcements, but we'll start with a very important one of them, because the core of everything we do, guys, is not tech. The core of everything we do is the people behind the tech, behind the community. It's every single one of you. But who else today, Dennis? Who else is the person who we want to announce, or is the thing that we want to announce?
Well, what we've been working on, it required a certain period of time where we were focusing mainly on, getting the tech done, creating the background for what you mentioned. Everything is being built by people, for people, right? And in between that is the messages that you are able to communicate, and so the communication is key. We've been able to kind of do that through me, but it became obvious in the past month, especially after releasing Oceanpoint, that we need to step up, and thankfully we have within Blocksquare.
Let's be honest, by the way, Dennis, we needed a better face. So you and me, our faces were not doing it anymore. So we needed a better face.
We needed a better face, and who's better than Julia, right?
Exactly.
So, as of a couple of days ago, Julia Buchholz, who's based in Perth, Australia, she is taking up the role of Chief Marketing Officer. I think this is something that's quite exciting not for just us as a team, where we'll be able to take more responsibilities jointly, but each of us focus on the responsibilities where we excel. And Julia kind of leading communication on social media towards our community. Mainly, that's, I think, the most important one. Is a very, very powerful person coming in with a lot of experience. I'm not sure, Makram, if you know, but Julia she's been in marketing, for almost 2 decades in a way. She's had roles in different positions. She's been throughout the ICO kind of times, done a couple of projects there. So she's learned a lot surrounding this, and she comes more from the crypto side than the real estate. But in a way or another, she got involved in real estate, in connection to blockchain, and she actually has the first certified course in the world, I think, on real estate tokenization, which means that real estate professional in Australia, mainly in Western Australia, can take those courses to kind of develop their kind of continuous growth path officially. And I think this means that we have the ideal person to lead marketing for Oceanpoint with us.
That's great. So great news to every member of the community. Guys, you've been waiting and you've been wanting and you've been helping to get our message across, to get our thesis across, and to talk to the world and to tell them that actually BST has the dynamics of Bitcoin, yet we're not Bitcoin. We are a very solid coin or token that is backed by real estate and backed by a business that has a very solid ecosystem that's growing by the day. And how big is our tokenization pot today, Denis?
Last time I checked, we had 28 unique real estate assets. I think across 6 jurisdictions now. Total value is around 22 million US.
And rolling. 22 with some in the pipeline, I believe, yeah?
Indeed. And this doesn't include some deals that we're just, talking with certain, parties around us. So, I don't count in anything that is just, we once talked with somebody about tokenizing something. I'm talking about concrete stuff where data has been already collected. There's an agreement between us and the owner to actually tokenize it. So
today it's Slovenia.
Yes.
Vienna.
Yes. Austria. Yeah.
Bourges, Belgium.
Belgium. Yes.
Turkey.
Turkey, indeed.
UAE, Dubai.
Yes. And Germany.
Germany.
Yeah.
Perfect. So we're looking for assets now in Australia. We're looking for assets in the US. We're actually dynamically and actively talking to people in Canada today, to people in Brazil today, and there's much happening over there. Today we had a very small session, Denis, about why, and actually we wanted to create a small teaser, slides, to tell people about basics of what we're doing. And I believe we created something very dynamic in a very short space of time. But why don't we reflect that to everyone listening today? Why don't we cover all the basics once and for all and move from that? So how about if I ask you very fast questions and you give me very fast answers so that I can be informed and everyone else who's listening to us?
All right.
Very good.
I bet you can do fast questions. I'm not sure if I can do fast answers. But I'll try.
You have limited airtime, so
yeah.
Okay.
True.
So the first question is, what is DeFi?
Okay, that's well, it's DeFi, if you're explaining it to somebody who hasn't heard about decentralized finance, you would say that this is, a new emerging growing market that's several billions worth today already. And the main characteristic is that, all financial transactions are guided, by smart contracts and not, corporate authority or, that has or might have political bias, which is something that we experienced, in the past year. And most importantly, doesn't have this centralized control.
Okay, you need to be better on speed. So the second one is, what is tokenization?
Well, this is the process of creating a token that basically acts as a digital representation of a share in the economic rights, in our case, of a real estate asset, a real estate property.
So, thank you. That's better. What is staking?
Staking, like in general terms, it means that you're committing value, which is, in DeFi mostly represented by a token, and you're committing that value to a particular protocol to support the protocol's liquidity, its growth, and, overall its value.
Okay. So why would anyone tokenize property today?
Well, in terms of Oceanpoint, you want to tokenize real estate because it will enable you to stake the value of your real estate property to bring value to a new protocol, and that new protocol is going to reward you for it.
Okay. So let's say you've tokenized property and you've staked it. First, if you can run us through the process of how would I tokenize property. By the way, guys, we will put in the description under this 2 slides. Is it okay, Denis? 2 slides?
Yeah, sure.
That will guide you on what we're talking about now. I'm sure that many members of our community now are saying, guys, we know all of this. We know much beyond it. We want to grow you guys. We want to grow your community. We want to grow our community. So we need to add others and others who may not understand it. Remember, our core client at the end of the day is every real estate owner. Our core part of our infrastructure and our core being is a real estate owner. It's real estate. And not all real estate owners, starting by me, are people who are tech geeks. Yeah? So we need to run it scratch from basics, and everyone can learn something. So we had people tokenize. How can they tokenize today? Somebody today wants to tokenize. How would he tokenize? How easy is it?
Okay. For the owner themselves, is as easy as filing some form. So filling up a form, providing some documentation that is quite standard, that they have it on file. If they don't, they know where to find it. So it's nothing that requires them to know anything about coding, anything about
So it's
tech.
similar to you filling a listing form for an agent today to tell him I have a property for sale or for rent. So, and in the description today, you'll find the click of a button that you can click and open that form so that you can fill your details, your property details with it.
Yes.
Perfect.
And it's like, it's similar to if you want to go and take a mortgage, for instance. The bank will ask you a certain set of questions. They'll do some background check. They'll obviously do some due diligence, but it's quite standard, and all the data you can actually get it. If you have already obtained a mortgage for your property, that makes it even easier because you've already done this, and you can kind of reuse the same set of data to tokenize.
Very good. So let's here differentiate or separate this into 2 processes, 2 pieces of a process. It's the same process, but it's 2 pieces. Today, you'll be following a very simple process of filling a form, filling basic details about your property, the location, 1 image, ownership documents. It takes you no more than 10 minutes to do so. That's the only thing you need to do. You load it there, and we will take care of everything else. Now, you tell me, wow, is this the only thing I need to do? And is this the only thing that any owner is required to do? I'll tell you, wait a second. There is another piece of the process to conclude this in the future, but that's post these 6 months, and we'll talk about it in a second. So that's not the end you'll hear of us, or that's not the last you'll hear of us. This is the start of your process to tokenize, and after that, to do what we will talk about in a second now. After 6 months, there's another piece of the process because it becomes more serious. Today, you're committing to us that property. We're committing to your rewards as part of the process to incentivize you to be part of that protocol, to incentivize you to be part of that ecosystem that makes it more dynamic for everyone and adds more value for everyone, including you. However, there is a further step when things become more serious, because there is a party who will buy the tokens that we've created for your property. And at that point of time, we have a duty. And our duty is to protect investors from any attempt of anyone to manipulate the system or to fraud. Okay, that's our duty. So there is further steps to be taken at another level, past the 6 months, to do so. So let's talk now about the 6 months, and then we'll talk about that, I promise you. But for whoever listening, this is not the end of it. So you've tokenized, you filled that form, and yes, you've tokenized immediately after filling it, because we'll do everything in the process and we'll take it forward. So people have filled that form, Dennis. What happens next? After we took those details, we created the token for the property, and now it's coming soon today, but soon it will be live. What happens after that?
So after that process is done, we still need to, you will receive a document to be signed. That's the legal component of the tokenization. And then after that, it's linked and prepared for staking. So we want to make sure that what you're staking is not an empty token, but it's a token where economic rights are actually transferred to it. But you're not the tokens will not be transferring to anybody else than yourself, your own wallet. So you receive it on your own wallet. You basically just digitize what you already own, and now you can use that digitized form to earn some crypto on the side. So you're not parting away with any of the revenues. You don't have any commitments to anybody else. It's just you, doing a digitization process in a way. And that's it.
So you're putting your deed in your closet. You're putting your revenue in your bank account. However, you're testing with the technology of the future. You are talking to the future. And here, because you do that, you get rewards. Do they get any rewards?
Yes. Yeah.
What kind of rewards?
They're going to get rewards in a form of crypto, and that crypto is the Blocksquare token, which has been doing quite well since the launch of Oceanpoint, and we see that it might potentially grow even more. But for the asset owners, it's a low risk bet. So essentially, it's like they do make a commitment. It takes some time from them, but it's a learning process. And I think this is also an important thing, because people are curious, or if they're not, they should be, and this will bring them some knowledge that might be handful even for them, even, if they don't continue after the 6 months to be involved in it. So the staking process is going to reward them with BST. And after May 22nd, the rewards drop to 500,000 BST per month, the distributions.
So first 2 months, it was 1 million BST per month.
Yes.
The 4 months that follow, so May 22nd onwards, it will be 500,000 BST per month.
Yes. So it was the first 3 months. So we started on
February.
February 22nd, then March 22nd was the end of the first month. And then now with May 22nd, we're ending the third month. And for the first 3 months, it was 1 million BST per month being distributed to stakers of BST. At that point, somewhere, we will have the asset pool published, and that's going to kind of start the staking process for asset owners. And the split is going to be 50-50 between the governance pool and the asset staking pool, which means that, you know, in that pool, you're going to have 250K of BST being distributed on a monthly basis. Now, how much of that BST is going to be yours, you know, it's hard to predict, but it depends. If now you see we have 22 million worth of real estate tokenized, and let's say that until that point, another 10 million are going to be added, and you own a property worth 1 million, then you're going to have a third, you know, a
so
30th
to make it very
whole
easy, if 25 million only is tokenized by then, and 250,000
Yes.
is the total pot, 10,000 BST is gonna be distributed on everyone who owns a property of 1 million, and that's per month. Yeah.
Yes.
So
Indeed.
1 million. So 10,000 BSTs, guys. So just let me give you an idea about what are we talking about over here. By the way, something to mention here. BST over the past, although we're not price cautious, so we're not somebody who's following the price of the token every day and saying, oh wow, it's more today. It's irrelevant to us what's the price of to me, what's the price of the token, because maybe to Denis it's slightly more relevant because it's not perfect. So it's irrelevant to us, guys, what's the price of the token. Yes, we want to build value, but we're looking at much bigger value, and we're looking at much bigger future value rather than the temporary blips here and there. However, fundamentals.
Makram, just to stop you there, it's like we're in it's a price discovery, right? The market doesn't know how to price it. So whatever it prices it today doesn't mean it's true. So it's not important. That's what I'm saying.
Exactly.
But what I do like is I like that the community is betting long term, and which means that it's aligned with what we're doing. We're also betting long term.
And you don't have sellers, by the way.
Yeah.
And you don't have sellers. Yeah, we have a problem. Nobody wants to sell his BST. so guys, in the past 2 months, BST have grown by around 40%. Am I right, Denis? From 20 cents to 30 cents, or 20-ish cents to 30 cents.
Yeah, I think so, yeah.
Perfect.
Yeah.
So, guys, while the market have dropped by around 40%, we've made a 40% value gain on a BST price. Yet, there's another thing more important. Today, if you're collecting 10,000 BSTs, they're valued at around $3,000 if we do a very simple mathematical calculation. So if you tokenize a property of $1 million, imagine that you're getting $36,000 if it was 12 months. So prorated over 12 months, you're getting $3,000 every month additional to your income. Now, that is if you want to sell the BST today, although you wouldn't be able to. But if you want to be selling it today, you'll not be able to, by the way, because you're not supposed to. We want everyone here long term, and we want to protect every BST holder. So the party who collects that, let's say in a year, you've collected in the 6 months only 10,000 each month, and that's a total of 60,000. In a year, let's say that the value of the token is $1, which is not crazy growth for any token in a market where there's this much of economic value being created in the backing of it, and this much of commercial value on the side, because there's not only real estate locked, there's much more commercial value being locked that you will hear about soon. You will hear about marketplaces launched. You will hear about parties investing significant amounts of money to use Blocksquare technology in certain countries in the world, which has been happening, but now more so, and more of it will happen. So today, that person collected 60,000 BSTs. The value is $1. That's $60,000. if he have staked a property worth $1 million and got $60,000, and again, those are assumptions, guys. We're not promising anyone $60,000 or 60,000 tokens, because let's hope that we are more successful than getting 25 million or 30 million or whatever, and then hopefully everyone gets 1,000 tokens, and he should be happier about that, because that means the future value of the token is much higher. So can you do the mathematics and see how profitable was that venture for you? Pretty profitable, yeah? And remember, you're not paying for tokenization, Blocksquare is. You're not paying for the process, Blocksquare is. You're just attempting to join the club. Now, they came in, they staked, they got the rewards. What happens after 6 months, Denis?
So this is something that we've been working on. I mean, we've been working on also on the tech side, and this is why there's some, I would say, some small bit of delay, but that's perfectly fine. We wanted to find a way to simplify the withdrawal process without having a market where free BST has flooded it, because that's, I think, the biggest drawback of what we're doing for BST holders is like what happens after the 6 months of staking. These real estate asset owners will have all these BST maybe, and never really invested except, with their property in staking. And so from a perspective of the community, I think what we implemented is very important, which is a vesting functionality. So after the 6 months, the asset owner is able to withdraw the tokenized property, so the BSPT tokens to its wallet. And when they do that, a vesting period of 2 years starts, which means that along that two years, the owner will be able to withdraw with time the BST proportionally to how much time has elapsed.
Perfect. So you're getting token rewards. You are able to withdraw them with time. So it's not like they're locked for the coming 20 years and you can't withdraw that value. You are able to unlock it with time. Now, why would you unlock it with time? You'll not unlock it all at the same time, because let's say we're so successful and we get $200 million of property within the coming 6 months. You definitely do not want, none of the community members or everyone vested in this long term wants all those rewards thrown on the market at the same time, or a big amount of rewards thrown on the market at the same time. We need to make sure that we protect the value, and we're pretty sure that with time, this value will be insignificant to the future value that's coming. So within 2 years, that will be insignificant. So what are the options for whoever withdrawn had the BSPT? There's 4 options, yeah? What are they?
Yeah, there's actually 4 things if you really dissect it. Diluted down, there's 4 things that you can do. The most obvious thing is you can withdraw it, and that's it. But and do start withdrawing the rewards and just stay still. But I think one of the important things that you can do is you can sell those property tokens to Oceanpoint. That's let's say number 1. The second option will be to sell the property tokens through a marketplace. That marketplace might be even Oceanpoint's marketplace, or it might be a marketplace run by another operator. Another option might be to keep staking the property tokens. That most probably will not be the most economically viable solution, because there's 2 ways of how this can grow. The asset pool can grow in the amount of value. So the rewards you're getting versus the rewards you were getting before, when the asset pool was still small, are gonna be insignificant to you, and you might find it more interesting to utilize your property in another way. But regardless, you can keep staking the property, and delay your withdrawal. This means that as you delay your withdrawal, you also delay your ability to withdraw the BST that accumulates. So once you click withdrawal, you get your asset tokens back, and at that moment you're able to start withdrawing, and the vesting starts for your rewards. And the fourth option, which is the one we don't like that much, but it's a no strings attached value proposition that we're making today. It's to reverse the process of tokenization. So if you don't like what's happening, if you don't like to be a part of this, we'll be happy to reverse the process and basically.
And you keep your rewards.
And you keep your rewards, but still 2 years of vesting that's applied no matter your decision.
Perfect. So 4 ways. First, no strings attached. You take your tokens back, you cancel, you reverse the process. We hate that. You hate that as well, because the only thing you don't want is to exit the future. You lock into the future. You send your first email. You don't want to go back to writing letters after that by hand. So that's the future. Option number 1, no strings attached. You reverse the process, no costs to you yet. You got the rewards, and the rewards are yours, and you are able to liquidate them with time if this is what you want to do. Option number 2, you stay in the system, you keep it tokenized, yet you say, you know what, I want to keep it tokenized in my name. I don't want to sell it to any third party. I want to keep the property, yet I want to keep it tokenized because, 1, you've tokenized it on my account. You've paid for that tokenization process. 2, you not only tokenized it for me, I may need it in the future. I may need it in a month, 2 months, 3 months. I may need to sell 5% of my property, 10% of my property, or whatever. Why not? 3, so it's a no-brainer, in other words. 3, you come and say, you know what, I want to try my luck with the open market. I want to try to sell those tokens to retail, to every single person around me, to my nephew, to my son. Actually, you may have 5 sons. That's 4, 5 sons. You may have 5 sons, and you may say, you know what, I want to distribute 2,000 tokens to each of those sons, 2,000 of those property tokens. So you've distributed 2% of value, of economic value to your children. Okay, and I want to do that because I want to start building their nest egg. And this is how I want to start doing it and motivating them to do this in the future. Last but not least, you may say, you know what, I like it. I like the future and I want to live the future. So I want to sell those tokens to Oceanpoint. I'll get stablecoin, and now we'll talk about what is a stablecoin. I'm sure everyone knows about it, yet I'll get a stablecoin that is pegged to a fiat currency, call it US dollars, euros, or anything you want. In our case, it's a US dollars. And you take that stable coin and you can liquidate it afterwards, and you can take that money that's liquid, that's yours. So you've sold that 10% or 2% or 5% of your property, whatever is tokenized, and approved, because now we'll talk about this process also, what would be approved. So you sell that to Oceanpoint, and why would you do so? First, you got liquidity. Second, other than liquidity, you are able to take this amount that you got and reinvest it within the same system. So if you own a property in Dubai today, and let's say I own a property in Dubai and I tokenize it and I sell 10% of the tokens of it and I make $100,000 of that. Now, if I want to diversify, the best I can do is look at that pool of assets and fund that and be part of that, because that can create future value for me. Isn't it, Denis?
Yeah, I mean, the challenge is going to be like, it seems like when you talk about finance, right, everybody becomes serious, but in the end, what we live in, is a world of gamification in one way or another, right? We play different games, and and the more the rules of the game are kind of defined, the more easy it is for a larger amount of people to play. So what we'll be need to do is maintain people to play through Oceanpoint. Why? Because it is they have a good incentive in economic terms to do so. Instead of going out of it and start playing other games outside of our DeFi protocol, our goal will be to keep them here and have them earn with us, not without us. It doesn't mean that we won't promote them from exiting and coming back, because the more people can go away and come back, the more confidence they gain that this is a nice game to play. Otherwise, it might be even a Ponzi, and people don't want that. So, but either way, whatever type of business you're creating, you want to have people use your services, your tech, or your products, and that's you're creating new products so they can keep on coming back and you're playing on your platform, whatever you're doing, if that's closing or if it's Facebook, or if it's a whatever type of product you have.
So today, option number 4 is to sell those tokens to Oceanpoint. You get your money, you move on with your life, or you can reinvest the money the way you like. And this is in our opinion, the ultimate, because you are able to access immediate liquidity and much more. Now, I've mentioned something here which I want to talk about in a second, Denis, but first, can you tell us what is a stable coin?
A stable coin is a dollar, a coin that's pegged to the dollar. So, and it might have different mechanisms that make it so. But a lot of people, when you talk about crypto with them, they don't know that this option even exists. They just think that crypto is volatile and that's it. And which is usually when the token has a fixed supply or nearly fixed supply, that's what happens. But with stable coins, they usually don't have fixed supply, but they manage the supply based on demand.
Perfect. So a stable coin is a digital form of currency that is pegged to a fiat currency that you use every day. Thus, the swings in its price are relevant to the fiat world that similar to you hold euros or dollars, and how do you maneuver between them, isn't it? It has the same inflationary and deflationary characteristics, and this is what it's supposed to do. One of the stable coins that we can mention today is DAI. Another is USDT. It does not have only to be linked to the dollars or to the euros. It can be linked to a basket of currencies. It can be linked to a commodity. It can be linked to anything else that's stable, that gives it that characteristic. Cool. So
usually the stability is achieved by having it redeemable for something else of value in an almost instant way. So if you have one DAI, you can always redeem it for $1 worth of ETH, essentially. If you have one USDC, you can always redeem it for $1 in your bank account. With USDT, that's supposedly the same. And basically that's what, the belief of people that, this token represents $1, that's basically what gives it as well stability.
Perfect. I have a question here, which is why and how would we look at the properties after the 6th month? How would we evaluate? What would we take into Oceanpoint? What would we buy into Oceanpoint? But prior to going into that and making the rest of the session as boring as we made the beginning of the session, the first part of the session. By the way, guys, share this. So for whoever is asking questions within the community and outside and has friends asking questions, share this episode. It tells you all about it in a very simple form. It's actually the simplest form that this can be put in. And I promise you more simplicity within what's coming when we talk about smart contracts and when we talk about how can things be established and how can things be triggered. However, I will go to Twitter with few questions before I go forward. Are you ready for that?
Yeah, sure.
Okay, so investors on Oceanpoint, are they investing in equity or debt? Or maybe both, depending on the property. I'll follow up with another question. How do you convince investors to change gears and take risks into a new technology solution during times of uncertainty? Let me answer the second part. That's why I followed it with that part, because that's the easy part.
Okay.
I would like to answer the easy questions. And then I'll leave the first part for you, Dennis, to answer. So how do you convince people to take risk? Actually, you have a better way to do it, which is first to remove the risk. In other words, remove any costs and any impacts and reward them. And that's exactly what we're doing. So today, what we're doing is we're removing the risk and the cost. We are paying for your tokenization. You're not paying for a smart contract. You're not paying for the technology. You're not paying for gas fees. You're not paying any fees today. We're paying it. You're onboarded. Your property is onboarded. You try it for 6 months, no strings attached, you can exit. So in other words, you do not have a risk. So we remove the risk factor here, the risk element. The second thing is we reward you. So when we pay people to be part of that environment, to be honest, guys, it's a no-brainer. Really. Now, Dennis, the first part of the question. Investors in Oceanpoint, are they investing in equity, debt, or maybe both, depending on the property?
Well, I may have answered this some time ago, but it doesn't matter. So the way we structure the tokenization, the transfer of economic rights, is so it doesn't have this main characteristic of debt, which is a defined date in time when debt needs to be repaid to the lender. And here we don't have this date, but we instead defined real life events like sale of the property to a third party, so transfer of title or transfer of shares, so change in shareholding structure of the company that issued the token. And if either of the two happens, then there's an obligation to buy back the tokens, basically.
Okay, so what we're saying is that it's equity, it's not debt, because it doesn't have the characteristics of debt.
Yes, it is equity, but not in the form of shares of a company being tokenized, but tokens representing just the economic rights that derive from asset ownership.
So it's the equity in the property and the economic rights in the property. And guys, the economic rights in the property are what I would explain as the following. It's a perpetual value, and it can give you perpetual rewards. Now, by perpetual here, I don't mean the house will live forever. Yet, and we have an architect with us here who can tell us how long can the house live for. However, perpetual, I mean as long as you and me can live, and it's in perpetuity, so it can be willed and willed and willed. Economic rights of a property hold exactly the same characteristics of the property itself. The only difference is today, if we want to transfer the deed or the title, the minute that we do that, we need to go to a land registrar and ask him to help us transfer that or register that, record it. Now, there's a difference in jurisdictions, legislation, models of how, what is it? Is it the deed system in your country or is it the title system in your country? And what does that mean in ownership terms? And that creates complexities on that level. That's why we went for the right solution, which is economic rights, which represents everything but that paper. Everything that that paper holds, every benefit today and in the future, including right of use, including right of income, including all the other rights. And here, the question is for Denis. So that's what it represents. within that contract, what would we be able to include? So that contract, that smart contract, that agreement, there is things that are included. What can we include in it? And what does it mean to people? And what should they look at and for?
Okay, so what are included in you mean in the smart contract part or in the corporate resolution where we define the economic rights?
So what people see is the smart contract, and what people see is elements of it. And what I'm interested to tell people is this is what you should look out for. So when you're looking at a smart contract, to understand what does it represent, what kind of agreement does it represent, they need to look at things. And here I would define, by the way, and this is an analogy that came into my head yesterday when I was chatting with a friend and someone who owns real estate in Canada. And I wanted to explain it in very simple terms because he have never seen tech and never knows tech. The most he knows of a tech is a laptop that he probably uses. And I said, you know what? Generally, there are things that are done on a manual basis. So things that are triggered by you. I'll give you an example. 10, 20, 30, 40 years ago, when you used to go into the car with your family, with your wife and your kids, you used to put yourself in the car, close the door, and if you are in a non-very secure and safe environment, you would ask your wife and your kids to lock the doors prior to you moving at night. So before you move, you lock the doors. And you ask your kids, Michael, have you locked the door? Janica, have you locked the door? And you ask your wife to lock the door before you move because you're going through the mountains from your father's house to your house. Now, today, that process has had a protocol created to enable it or to trigger it without you doing that. So today, when you turn on the car and you go into drive, what happens is that the doors lock, isn't it? And that's an automatic trigger that enabled you to get a result just because there was an action taken before it. Now, when you put a process like that, when you set a process like that, and you create a smart contract with such a processes, there is triggers that trigger things, trigger things that are motivators or trigger things that are justification elements. And those triggers are put into a smart contract to make it work, isn't it? So, Dennis, what are the things that they need to look at? What is a smart contract that protects an investor, and what is a smart contract that does not protect an investor?
This is a difficult one to answer. I would say.
I
what is a
collect them
smart
for you,
contract
Dennis.
that
I collect them for you, my man.
you do, indeed. Honestly, I think that a smart contract that protects the investor is one that has, been used a lot of times and protected many investors. That's, so far. Otherwise, there might be an exploit because in code there might be mistakes, and because there's, technology that is being used is quite novel. It means that the more you complicate it, the more you expose it to hacks, to potential hacks. You might be creating vectors of attack that you haven't foreseen. So in terms of tokenizing real estate, we're using a very, very well-known type of contract, which is an ERC20 token contract. It doesn't have any complications around it except on the transfer functionality, which needs to be limited because of KYC. Otherwise, it's pretty standard. It does have fields where we can input data, and that data can be the feed for that data can be, a simple transaction, or it might be an Oracle system. We had discussions within the community, I think, about using outside data through oracles and especially for pricing and so forth. In terms of what the community should look at when analyzing the tokenized assets that we provide, I think it's what they can look at right now is the data on the valuation, the data on the geolocation, the street where the property is located, as finally, or last but not least, the IPFS hash that links to the corporate resolution. But that's something that our UI of the marketplace also supports, so that you can just click on it and it does read the information from the smart contract. So it's easier to access for somebody that's not tech savvy and doesn't know how to browse through Etherscan, for instance, and it makes it way easier than to use.
Perfect. So in other words, what you should look at is the details of that kind of agreement. So you can see over there the valuation that has been done on the property. And by the way, the valuation in our case should be done by a third party, and it should be an official valuation. And now we'll talk about that in a second. The second thing that we look at is that the details of the property, including location mapping, including all of those details that are there on the contract. At the same time, there is details of the corporate resolution, isn't it, Denis?
Yes, it's the corporate resolution is actually, after signing, it's uploaded to IPFS, and that means that on IPFS it receives this unique hash, and that hash is then stored within the smart contract. So, this way we are able to link something that the court can recognize, and that brings safety to a token investor, with something that is a technology piece, which is the smart contract.
Perfect.
And that they can work jointly.
So in 6 months, we reached a point where people will come in and say, you know what, I want to sell my tokens to Oceanpoint. How will we decide what to take into Oceanpoint, and what is the process by then? Is there a process? Should they get evaluation? Should they provide us more data? What should they do?
Yeah. So for each asset individually, we can define risk, how much we want to expose Oceanpoint to that particular asset. Obviously, the more documentation it will have, the more information the owner will be willing to share with us, the more the community will trust it, and thus increase the allowance in a way, or the threshold for Oceanpoint to purchase those tokens. So let's say that by default, any tokenized property will have a threshold of 0, which means you won't be able to transact with Oceanpoint and actually sell your asset and gain liquidity through it. But if you have certain pieces of information that you provided, we might define that by default we accept 1%, so 1,000 tokens. Then maybe we'll require a certain additional documentation, and by providing that, plus maybe a due diligence by a third party that we would appoint or we would suggest to be used. Maybe that's Deloitte, maybe that's some other company that can provide that due diligence. It really depends on the asset size, because for a 300K asset, you won't be paying 3,000 for due diligence, but
especially
it makes
that
sense
you're not
larger...
tokenizing the whole asset. The maximum we decided to tokenize at this period is 10%, and probably most of the threshold on most of the properties will not be 10%, will be 2, 3, 4, 5, as you mentioned.
Exactly. And obviously, the other component of trust is time. So this allowance might be adjusted within time. So there's multiple ways of how we can mitigate risk of exposure to a single asset. One is due diligence, and another one might be through the use of smart contracts for, let's say that we would increase allowance to 15%, but the actual payout might not go in the same transaction, but it might be vested over time, or we might define certain KPIs that need to be reached for the full amount to be withdrawn. It's similar to when you go for a loan with a bank, especially when you're talking about commercial real estate loans, or for instance, development projects. You need 10 million. That's fine. The bank approves 10 million, but you can first withdraw 2 million to break ground and do something. Then they send the inspection. They see that you've delivered, and then they allow you or bring the allowance or withdrawal up. And in a similar way, we can program that through smart contracts and make it more and more sophisticated. I think at first it's going to be less sophisticated, much more manual work to be done, relying on third parties. And as the world evolves, you will have, oracles providing a lot of information, and that can be, from the real world, and that might be used to trigger those events instead of manual work.
Perfect. So the property that will be taken in will have proper evaluation by a third party, proper due diligence depending on the property, and by the way, all risk management, and this is exactly what Denis is saying, all conventional risk management practices will be taken and utilized. It will not be without those risk management practices. It's exactly what private equity firms, what banks would utilize today to protect themselves, their capital, the capital holders, and the investors, isn't it? Now, we have very fast questions.
There's this. Yeah, I know. Just wanted to mention, because this discussion obviously was even before, but an interesting thing that came from the last block chat where we aired live, we kind of emphasized how the community should reach out, because I believe that we have many people with a lot of skills within our community. They have knowledge that we don't hold. And a similar thing happened when someone from our community reached out via Telegram. We connected the other day, had a 1-hour call.
He's a banker.
And yeah, he is. He has a lot of experience in banking, and this experience is something that can just make stronger what we're building. Like, the stupidest thing would be for us to not listen to people that have a different understanding that we have, and not even and we should engage in creating the product in such a way that we can provision for most risks that it is exposed to.
Perfect.
So, yeah.
So here I believe that guys, ultimately we want to become a DAO, and the way to become an efficient DAO and an effective DAO is that the whole members of the community get involved, and this is something that's happening. We're a growing community. It's always known whenever you talk real estate or prop tech today, or specifically blockchain and DeFi and real estate, because it's an intersection of three industries, I would say. It's technology, it's fintech, so it's prop tech, fintech, and real estate. So all of those are intersecting, and there's challenges usually. However, we have a very loyal community, people who do care and people who do put effort. So I salute them for that. Very fast questions here, Denis. First, a difficult question for you. I'll not touch that question. With rising mortgage rates in the US and Feds selling mortgage-backed securities off their balance sheets, the fears of a housing crash is something on the minds of investors. Can Blocksquare provide a liquidity solution during a buyer's market when there is limited liquidity? Actually, today
that's a really tough question,
yeah,
right?
Today, I'm sure it's a big claim. It's a false claim that we can. But what we are building will eventually do so. the idea of DeFi tokenization, actually we were putting the benefits, and please guys, the slides will not be put into the description today, but will be added within a maximum of 2 days. So please look at them, and all of those answers have specific or questions have specific answers.
We'll be sharing them on Discord, right?
Exactly.
I think the best thing we can do is share this deck on Discord, because I'm sure that the community can use it.
Perfect.
And there's community members bringing real estate assets already, whether that's theirs or they're bringing somebody else in, and I think that's gonna just help them out. And we're gonna receive feedback from them as well on whether there's things to be changed.
And it answers those questions. And one of the answers is that creating liquidity at the time of a drought of liquidity is what tokenizing allows you to access. DeFi allows you to access as well. However, tokenization by nature allows you access to liquidity when there's no liquidity. Because trust me, guys, when a bank just decides to stop lending because the Fed stops throwing money into the market, as what will happen eventually in a day, in 2, in 10, it will eventually happen. And remember, you only can borrow usually when you don't need the money, when you really need the money, when there's opportunity. So a few months ago, I went ahead and remortgaged every single property, and I got an equity release of every property I don't have a mortgage on. And people ask me, why? You have so much cash and you don't need it yet, so why are you adding to your cash pot? I said, because the minute that I will need it, that the minute that there will be enough deals for me to grab, there will not be liquidity. So if I own the liquidity at that time, it's so valuable. So what I would tell you here is, your neighbor who is doing manufacturing of something, your other neighbor who sells and trades vegetables, those people are the real economy, and those people's businesses regularly are stable enough and will continue to have interest to deploy money at a small level. Remember, they're not institutions. They don't have the biases of institutions and the agendas of institutions. So those people will continue want to save for their kids, invest for their family, invest for their future, create a nest egg, buy a house or a portion in a house that they would like, in a street that they would like. And those people will love to own 100 or 1,000 tokens of a property. And those people will still have the money when banks stop having it. So eventually, I believe we are the solution, and the solution is coming. Yet, we're so early, and today for us to claim anything near that is probably trying to build hype which is based on no fundamentals and has no clarity and truth in it, isn't it?
I think the biggest difference from what we are building versus the banking system in general, I think that what we're building is not based on debt, but on risk distribution. So, I mean, banks lend money to, and they collateralize their loan positions with real estate. And their goal is not to end up with real estate. They don't actually want real estate. They want to have their money back plus interest. Now, our goal is to hold real estate. So if we would zoom out, and obviously we're not there, but Oceanpoint is a combination of the Federal Reserve and BlackRock. So a private equity investment fund that has a deal with the central bank, which in reality it does. and a lot of printed money goes through BlackRock to the market. And here in a way we have it a similar setup where it mints its own stable coin, but for the purpose of owning real estate. So, taking on the risk of holding that real estate asset in its portfolio. And, with the joint functionality of a DAO that shares its revenue with anyone who wants to join. And that's, I think, a winning value proposition, but it's definitely different than whatever else there is on the market today.
Sure. And by the way, it's a claim that I want to make today. We are the first party in the world. Blocksquare is the first company in the world to tokenize this size of property and tokenize economic rights behind property. We are not tokenizing bonds. We are not tokenizing corporate debt. With all due respect to everyone who's tokenizing that, there's nothing wrong, yeah? Somebody is creating motorcycles, someone else is creating vehicles or cars or whatever. Blocksquare today is the first company in the world to tokenize any significant size of property beyond a test on a parking spot or a test on a bond on a small property here and there, or bond on a big property. Beyond that, Blocksquare is the first company in the world to do so, guys. And today, I would say we are the leaders in tokenizing property because we've tokenized $22 million of property. And I do not believe anyone else in the world have even approached that. So the run from here is long. The runway is huge. We're faced by headwinds and tailwinds at the same time. However, the winds that will win this time is the same winds that made the internet what it is today, are the same winds that made you not go back from the email to any previous technology that used to be used. It is what makes sense. It's the logical. And here on the logical, I would want to go back to questions that we've asked for this session. First, when do we expect, or when can we expect Oceanpoint version 0.2 to be released?
All right. So that's something that obviously the community wants to hear about. We still don't have a set date. That's like, I'll be fully honest. It's not because we haven't been working on it. We have. We've done a lot of progress. One of the things that we added is this vesting functionality after the 6 months. And I think this is like an important protection for BST. Another thing that we solved is a couple of vectors of attack where the system could be manipulated. And this is not something you get from an audit. You get from an audit, a very, nice, of course, audit. And, I'm happy we're collaborating with Hakan, which audited which is auditing our smart contracts. But if you really want to have a proper way of looking at how to hack this, you need to have sessions with your dev team trying to basically hack it.
Because you need to simulate the situations, or try to simulate what possibilities are there. Yeah.
Yeah, you need to first map out, various entry points, where is value being stored, where can value, be lost, and how you can, what's the easiest way of gaming the system in a way. And this kind of sessions are, they take time. And once you have all of those things ready, then you can go and submit the smart contracts to an audit. We already did one audit, which resulted in a 9.8 score out of 10 on another smart contract. And that smart contract is an upgrade for the governance contract that we're using today. That will have on-chain governance capabilities, which this smart contract doesn't have right now. And so if we do any governance voting, it needs to be done through Snapshot. But with this new version of the governance governance token contract, will have also on-chain capabilities. And I think that's an important thing, that we also achieved a very high score, which gives certainty to our community that wherever contracts we're developing and deploying, we're really making sure that they're safe to use. And that's a delay, but this delay, I don't think it's a problem really. Why? Because with staking of real estate assets, we want to have a pool where there's a very high or a higher diversification of asset owners as well. So, we now have the longer it takes for us to release version 02, and if we proceed with the tokenization of assets, I believe that also property owners are happy to wait a couple weeks more than not. It's perfectly fine. And we're able to then offer that functionality to a larger pool of real estate owners from the start. And that's also intuitive for BST holders right now because the rewards won't go to maybe 3, 4, 5 property owners, but to 50.
So, guys, what Denis have told you is where we are today. What are we doing today? What have we achieved already? What are the points we're working on to conclude? And probably you're waiting for a date. I'm a person who always love a date at the end of everything. A closure in tech, and whenever you're creating any piece of tech or working on tech that is breakthrough and that is very new, or if not very new, none tried yet in its current format, you need to do it right. And to do it right, it takes time, which I hate, and you hate, and everyone in the world hates. But what we hate more of that is the bitterness of something done half-hearted or partially and does not serve the purpose well. So I am...
In DeFi, you need to do things right because you can only do them once. And I think it's better to do them once, 2 weeks later, than, and then do it again and again and build up the trust than do it 2 weeks sooner and break everything that a large amount of people has put effort in.
Sure.
Yeah. So
if you're a bank, guys, you cannot get it wrong few times and then it works.
Yeah.
Yeah.
My thought to the team was, look, some were worried about a delay, and I said, look, guys, don't worry about a delay. Our community is supportive. They understand why it's being delayed, not because we're scratching, our heads, not knowing what we're doing, but exactly the opposite, because we do know what we're doing, and we are thoughtful enough to do it right and not rush into things. The important thing is that we have tech in place. We're tokenizing real estate, which is what really matters. We're bringing real estate value on chain. And as long as we keep doing that, we're bringing value to BST and Oceanpoint. And the staking, start of the staking is going to be just the manifestation of its utility.
So we're running a marathon or a triathlon. We have if the first part is running, the second part is swimming. They extended the running by another 2 kilometers and reduced the swimming for us. So it's not a problem. It's a triathlon at the end of the day. It's a very long route and we're doing it right. Another question here, or another 2 questions to close on this subject. How can you join the fun? We did answer that. Introducing Spotlight. What is Spotlight, Denis? What are we doing in Spotlight and why does it matter? And the next session, next Thursday, we have Spotlight, isn't it? Sorry?
You are doing, yeah.
Am I?
You are doing Spotlight, right?
Am I?
You are doing Spotlight.
Okay.
Yes.
So
you've done one so far. But
so the next go ahead.
Yeah. Sorry, I can explain what Spotlight is. I think we need to create a better connection between the team and the community, and to do so, Makram and I kind of defined Spotlight, a session that is focused on a specific team member. We don't know the release dates for each, but we will have the next Spotlight, I think, next week, and we'll be introducing one of our advisors on Spotlight. It's going to be Achim Jedelski, with Makram on a pre-recorded session, where you'll be able to see, Ahim's kind of thoughts on tokenization and how he sees Blocksquare and his role so far. And we're going to be presenting other team members more and more, so that it's not just our faces that you see on a weekly basis, but as well the smarter people.
100%. And by the way, guys, the spotlight that's coming next Thursday with Hakeem, it's something you don't want to miss, because I said at the end of it, I've introduced to you Hakeem the man, Hakeem the visionary, and the visionary in Hakeem is something, it's a story. You need to watch it. You don't want to miss it. You want to get introduced to Hakeem. Hakeem is someone who's very established. He is a visionary. He's on our advisory board. He's a core member of our drive and our energy. Hakeem is at the same time a co-founder of Fibri, the president of Fibri, member of the executive board of Fibri, someone who's committed to the future in a very inspiring way. So you need to be there. We don't want to take any longer, guys. We took so long today. It's around 21 minutes longer than usual. And we at the end of the day, we want to congratulate every single member of the community, as well as our team members, to having Julia with us. Julia is our new CMO, and Julia, as a Chief Marketing Officer, will hopefully guide us and you towards better exposure, better impact, and better connection, and better corporate communication. And our target is to create what you want, and we've been requesting that for some time, and you will see much more of it now, because there's a member of our team who's dedicated for that, and she's our better part. She's a better member of our team. So Denis, would you like to add anything today?
Like always, you finished up perfectly.
Thank you, Denis.
You finished the conversation, yeah.
Guys, wait for us next Thursday with Hakeem on Spotlight. Wait for the one after with a very interesting person. I will not disclose it now because we haven't recorded it yet, but I promise you a session. I've heard, by the way, amazing feedback on Daniel Gomez, on Simon Owen. I heard superb feedback on Pekka Kelka. I still have people calling me to say, will you see him again? Will you have him on the show again? And we're having an individual on the show who is amazing. And you will want to wait and watch him. We will have more breadcrumbs coming your way within the coming few days, guys. Stay with us. Again, another Block Chat on the brief with Denis Petrovcic and Makram Hani. Welcome. I hope that we didn't bore you. Sorry for being late at the beginning. It's not our norm. Neither do we accept to get late. Yet we had a small technical difficulty, and we will have more technical difficulties in the future, I am sure. We don't hope for it, but we wait for it, and we're prepared for it. Thank you. Join us again